Hello, and you're welcome to Global Business Insights, where you get more on the main business headlines across the globe. The Central Bank of Nigeria hiked the benchmark rate, that's the policy rate for an 11th straight monetary policy meeting, to 26.25% from 24.75%. We'll bring you more on that in this special episode of Global Business Insights. Investors are waiting for direction, including clues on the rate trajectory from central bank speakers and also more earnings announcements. In Europe, shares are mostly lower. Investors are also gearing up for the release of minutes from the Fed Reserve's latest meeting, that's tomorrow, along with the UK inflation print, expected to show a sharp fall in the headline rate. Indeed, some are forecasting that a sharp fall in the April print will take the headline inflation rate below the Bank of England's 2% target. Also, a plunge from the current level of 3.2%. Tomorrow's data release could make or break a June interest rate cut, economists say. Jamie Dimon, JP Morgan Chase CEO, signaled his retirement might be coming sooner than previously anticipated. And sounding bearish yesterday, he said the bank will not be buying back a lot of its stocks at what he called the present elevated levels. That was at its investor day. Meanwhile, all eyes are on tech stocks. Semiconductor companies, Micron Technology and Qualcomm touched fresh records yesterday, and Nvidia climbed closer to its previous best ahead of an eagerly anticipated earnings announcement tomorrow. Yesterday, shares of Norwegian Cruise Line Holding jumped 7.6%, becoming the top performer in the S&P 500 after the company raised its 2024 profit outlook for the second time in 3 weeks. CFO Mark Kemper said it sees very strong pent-up demand and record bookings boosting the sector. But let's go to Nigeria, our main focus for today's episode, where we listen to Central Bank of Nigeria Governor Cardoso addressing the press after the just concluded MPC meeting.
The committee's decisions are as follows. 1. Raise the MPR by 150 basis points to 26.25% from 24.75%. 2. Retain the asymmetric corridor around the MPR to plus 100 to minus 300 basis points. 3. Retain the cash reserve ratio of deposit money banks at 45%. And 4. Retain the liquidity ratio at 30%. Considerations. The key focus of the MPC at this meeting remained to achieve price stability by effectively using tools available to the monetary authority to rein in inflation. Members observed that while year-on-year headline inflation in April 2024 rose moderately, the month-on-month measures of headline, food, and core all declined significantly. This follows a decline month-on-month of headline and food measures in March 2024, suggesting that the recent tight monetary policy stance of the bank is beginning to yield the desired outcomes. The MPC, however, noted that the inflationary pressure continues to be driven largely by food inflation. The committee thus reiterated several challenges confronting the effective moderation of food inflation to include rising costs of transportation of farm produce, infrastructure-related constraints along the line of distribution network, security challenges in some food-producing areas, and exchange rate pass-through to domestic prices for imported food items. The MPC urged that more be done to address the security of farming communities to guarantee improved food production in these areas. Members further observed the recent volatility in the foreign exchange market, attributing this to seasonal demand, a reflection of the interplay between demand and supply, freely functioning market system. The committee also noted the marginal increase in the external reserve balance between March and April 2024 and urged the bank to sustain its focus on accretion to reserves. The MPC commended the bank for the recent approval of licenses of 14 international money transfer operators, IMTOs. This is expected to improve competition and lower the cost of transactions, thus attracting more remittances through formal channels. The committee noted with satisfaction that the banking system remains safe, sound, and stable, despite the headwinds confronting the economy. It commended the recent recapitalization initiative and urged the management to sustain its regulatory oversight to ensure the continued stability of the banking system. Members focused on the best policy approach to continue to guide the economy towards achieving an overall macroeconomic balance. According to the National Bureau of Statistics, real GDP grew by 3.46% in the fourth quarter of 2023, compared with 2.54% in the third quarter, driven by both the oil and non-oil sectors. Staff forecasts indicate that the domestic economy will grow by 3.38% in 2024. According to the IMF, global growth in 2024 and 2025 is projected at 3.2% apiece, while it revised Nigeria's growth upwards to 3.3% from 3.0% in 2024.
The lower 150 basis points hike than last meeting's 200 basis points was as expected, given a trend of abating monthly inflation, which pointed at the need to hike not as much as in the previous decision, while cementing the defeat of inflation, which still looks a bit stubborn, and noting that the bulk of the inflationary factors affecting food prices are not demand-driven. The central bank governor, Dr. Cardoso, in his characteristic shorter speeches than his predecessor, came across as relaxed, and the gains in price stability and in confidence from markets on monetary policy management must be reassuring. Also, as expected, the governor took several victory laps on lower monthly inflation growth over 2 periods and underplayed drops in reserves, noting that the bank needed to address reserve depletion. In answering questions on investors, they said the mood remains positive and players are exercising free entry and exit as expected in any economy, On inflation, he urged the government to look at the non-monetary challenges impacting the food supply chain, especially security issues and infrastructure constraints. Little was said on the foreign exchange rate stability and less clarity on the future rate hike trajectory or longer-term economic parameters. The mood had been set to slow down rate hikes as inflation abates, but no confirmation of when could get inflation peaking and when rates increases could stop and when rate cuts could be expected. The challenge one tends to have with our Monetary Policy Committee briefings is lack of enough forward guidance, in my view, and thinness on data such as summary of economic projections over the next 2 to 3 years to help investors plan. This could be done through surveys of MPC members and leveraging the extensive central bank analytics. The speech also came across as tactical, always optimistic, and not questioning issues like tepid economic growth, high poverty, and not a whisper on key issues like the unemployment trajectory, suggesting, in my view, that the CBN is either limited in its data set or less concerned on job creation and other important people factors. Still, it was good news in the sense that inflation is going down on a month-by-month basis, and banks are in good shape. Some other news, more headaches for Jeremy Hunt, UK Chancellor of the Exchequer, as the IMF warned that the government lacks scope for new tax cuts and will struggle to contain spending growth, adding that it saw a near £30 billion gap in the public finances. Rather, the IMF advised the government to raise revenue via measures including reforms to VAT, capital gains and inheritance tax, as well as by charging for a wider range of public services. We suspect that this is advice that Jeremy Hunt is unlikely to take as the UK gets set for elections. And in Europe, Janet Yellen is urging the European Union to join US efforts in clamping down on Beijing's green tech exports. She repeated early warnings that the glut of cheap Chinese goods could threaten the survival of factories across the world. Now she called at a speech yesterday at Germany for Western allies to react in a united way to China's growing manufacturing power or put their own industries at risk. In her speech, she also rejected criticism that the US's subsidies and sweeping tax breaks for green manufacturing were protectionist. Europe is looking for a middle ground, even as European Commission President Ursula von der Leyen has already said it would not join the US in imposing levies. Ursula von der Leyen explained that Brussels would take a different approach to Washington's blanket tariffs. And still on AI, leading artificial intelligence companies have signed up to a new round of voluntary commitments on AI safety ahead of a global summit in Seoul this week. And they are also committing not to develop or deploy a model at all if severe risks cannot be mitigated. And President William Ruto is rooting for the local manufacturing of vaccines in Africa. He said coronavirus pandemic exposed the acute state of the continent's pharmaceutical production. President Ruto said during this trying time, Africa was denied timely access to COVID-19 vaccines. He was speaking yesterday at the Center for Disease Control headquarters in Atlanta, Georgia, United States of America. In Asia, sentiment looks mostly on the back foot, mainly due to a Hong Kong tech sell-off and focused on signs about the health of the Chinese economy. S&P Global Market Intelligence raised this year's growth forecast to 4.8% from 4.7% in April, but also stressed that it wasn't exactly optimistic. Copper and gold are surging to new records, and crude oil was lower today as geopolitical tensions seem to be calming after the unfortunate helicopter crash that killed the Iranian president. Well, that's it from me on Global Business Insights. This is Bode Oshasani. Please share, kindly follow on Facebook and LinkedIn, subscribe on YouTube and X. Thank you very much for watching and following. Bye-bye.